Hello?
Hi, Orlando, you're in.
Hey, how are you, mate?
Yep, I can hear you loud and clear.
Awesome, awesome. Do you want to start? Can you, hello, can you hear me?
Yeah, Orlando, I can hear you.
Awesome, awesome. Why don't you start and I'll follow your lead.
Okay, sure. Actually, I thought you wouldn't be joining today. Paul sort of prompted me.
What? I'm sorry?
No, it's okay. It's okay. I, actually, since you're in my, so I also have there's something that I actually wanted to discuss with you.
Ah, okay, perfect. Do you want to discuss it afterwards?
No, I mean during the show. I mean it should
Ah,
benefit the
okay,
others
okay.
too.
Perfect, perfect. Let's do that.
Okay. So I'm
We are
grabbing the
12
screen.
seconds away.
Okay. All right, good evening, everyone. This is Lloyd speaking, and I have Orlando with me today. So, in fact, today, before I start the session, I wanted to ask something, or rather a discussion. I mean, we all know that, oops, wrong screen. That usually after a USD stimulus,
Mhm.
theoretically, the value of the US dollar should drop. Yeah, I think that's usually that's what people assume. But it doesn't really happen most of the time. I mean, to me, the difference comes down to whether it is a Democrat stimulus or a Republican stimulus. Now, the issue at large when I say that is because Democrats prefer, to me, that's what I assume. Democrats prefer money to be directly into the people's pockets or easily reached by the people. A Republican stimulus, they would prefer for money to go into the companies because to them, the company will have better use of the dollar. That means, in effect, the dollar multiplier. Yeah. So every dollar spent by the companies can actually stimulate more spending down the road.
Yeah.
So what I have here is actually comparatively, I think during the Obama period, we have multiple stimulus package coming in. I think one of the largest is in December 2010, or is it '09? Yeah, because that's straight after 2008, one of the largest recession for US. Then and you can see from here the US index actually go up after the stimulus package. It didn't go down. Theoretically, when a stimulus comes in, the dollar should actually ease off, not strengthen. Now, I think we can easily actually see some of the info from past stimulus. Now, what happens is this year, when Trump passed their stimulus, Republican stimulus, this April, USD
Mhm.
actually weakened. Yeah, it didn't strengthen, which is what we most of us would suspect. Now, actually, my question for today is that we know that US is going to pass the second stimulus package for the coronavirus.
Yeah.
It's at this point I don't know whether it'll be a Republican or a Democrat stimulus. Yeah, depending on when it is passed. If it's December, then it'll be a Republican one. If it's after Biden take over in January, it'll be
Yeah.
a Democrat. So from here, what I would likely forecast is that if a Democrat stimulus were to come in, USD will actually strengthen quite a fair bit. Now, if the Republican manage to pass their stimulus, USD will actually weaken. Uh, from that standpoint, uh, what would your view be, Orlando?
Well, my view is that no matter, I mean, no matter what, no matter who is in power, and no matter where, I mean, who wrote the bill for the stimulus, etc. To me, a new round of liquidity push into the economy is bearish for the currency, no matter where it comes from. Any kind of stimulus to me is bearish for the currency. Because the way that I see it, Lloyd, is um, like a commodity. The
Mm-hmm.
more currency is in circulation, the less valuable one unit of that currency is.
Yep,
So
true.
that is So that is why since March, on this huge round of quantitative easing, we've seen super bearish dollar. You know, fundamentally speaking, uh, to me, it really doesn't matter where the stimulus come from. Um, what matters is the size of it, uh, and it will be bearish for the U.S. dollar. Now,
Yep.
what you said about the fiscal policies, the difference between fiscal policies between Republicans and Democrats is a big deal to me because, and this is the reason that I don't understand why equities keep rallying on the news that Joe Biden won the election, right? Because the fiscal policies of the Democrats are higher taxes and less. Still access to liquidity, but let's call it not a cheap access to liquidity, right? So that
Mhm.
should be bearish for equities.
Theoretically, it may be so, but since all the past Democrats' presidency, the market actually rallied quite a fair bit. So this conventionalism might not hold.
I'm sorry, I didn't. I'm sorry, I didn't hear you.
I was saying that I mean, I would agree with you to a certain extent, but since we can see that the past Democrat presidency, the stock market actually rallied, so I would say that that conventional wisdom wouldn't hold water in this case.
Yeah, that's true, but remember that during the Obama administration, there was also a big round of quantitative easing after the 2008 um, housing crash. You know,
Mhm.
so but the thing is this, right? Um, QE is designed to support the economy, right? To inject liquidity into the economy, because what really drives an economy into recession is the lack of access to credit, right? That's a fact. So by buying treasuries from commercial banks, central banks inject liquidity into the economy. But the thing is that during the Obama administration, there was also a big round of QE,
Yep,
uh,
yep.
and do you let me see. So January 28, and from 2008 until what 2015, the US dollar actually appreciated, right?
Yep.
So yeah, so there, I don't know, Lloyd. Have you done? What do you think about that? Um,
Well, I, I think just to it's just my thought. I mean, it's not verified, but my thought is that again, back to the argument of a Democrat stimulus and a Republican stimulus. To me, the major difference is that again, uh, the issue of dollar multiplier is that when companies spends, let's say an MNC spends, they will spend the money to buy on machinery, so the dollar gets multiplied, and the machinery we use to churn out goods again it gets multiplied. People buy the goods, get multiplied, and then finally the dollar ends up in the bank. So the money actually does circulate. Now, what happens with a stimulus from the Democrats is that they want people straight to get the cash. So when you and I spend the cash, the cash goes to the store owner. So one-time multiplier, and the store owner banks in or buy the goods. So if it buys the goods, second multiplier, and then it actually goes way faster to the bank, which the bank absorbs back, and it stops circulating. So in a way, that is actually much more damaging to the economy because money, when it gets absorbed to the bank, it doesn't really circulate that much.
okay,
That's actually
so
that's how I would see it.
Yeah. So what you're saying is that the actual liquidity that is injected into the economy is not going to be used to purchase goods and services.
The usage of it will be way lesser if it ends up in the hands of ordinary folks. I'm not saying that's bad for them to have money, but unfortunately, that's the reality of it.
Yeah, I don't know. I mean, I'm not. I don't know because I mean, the process of liquidity injection, the main goal is for that liquidity to get to the hands of the common um, uh, I mean to the hands of the citizens, right? Because I mean, the goal is for for the economy to boost the economy, right? And it's
Yes,
impossible. Yeah, it's impossible to boost the economy if there's no economic action, in the sense that that's why I said what I said about the access to credits, right?
mhm,
If there's no purchasing power in the hands of the citizens, right, in the hands of the individuals, um, then the snowball effect starts, in the sense that because the purchasing power is less, then um, businesses are going to have to cut jobs. They're going to diminish their stock. They're going to start producing less, etc. Right? So that's why the main goal is to get that liquidity into the hands of the people that are going to to use it to buy stuff. But I haven't thought about what I haven't thought. I haven't really thought about what you're asking about the difference between a round of QE or a stimulus package from Democrats versus a stimulus package from Republicans. I haven't given it a thought, actually.
I, because it's just out of my head. I thought there might be some difference. I thought it would be interesting to look at how the market reacts to how it is being passed. Yeah.
Yeah, I mean, most definitely, Lloyd, most definitely. Um, and actually, I mean, I'm gonna be completely honest with you. I mean, I haven't thought about it until right now that you brought it up, right? Because in my mind, a round of QE or an injection of liquidity or a stimulus package has the same repercussions towards the currency, right? But yes, I do believe that there has to be a difference, but it has to be very subtle, right? I mean, right now, the way that I see it until now that you brought it up is the way that I explained it, right? More liquidity um, equals a bearish reaction towards the currency, but I think the difference has to be very subtle,
Mhm.
and yeah, and the difference has to be on how that liquidity is going to be injected. I don't know. I don't know. I mean, it's clearly very different to just give people money, helicopter money, um, than than the Federal Reserve buying treasuries from commercial banks, right? That is completely different. But I don't know. I mean, we have to do the research, right? And now that you brought it up, Demet, again, you have I mean, you have given me something to work.
Maybe I should better.
But I mean,
With
but
that.
it's clearly, I mean, and have you seen the reaction? the dollar on the last round of QE in 2008 versus this last round on March 2020.
Yeah, where was that? So you can see that from 2008, which is this period.
Uh-huh.
In fact, during the Obama's period, I think they passed several stimulus package. So you can see that Jan when he took over, I think that was the first round he passed. Price rallied. End of the year in 2009, he passed. Price rallied, and then you can see from here price rallied from henceforth. At least that's from the Obama period.
Yeah. When it started
Then
to rally in 2011, it's when they started to ease that round of QE, right?
Mhm.
Yeah, I
So
mean, yeah, it's quite interesting. But are you thinking about this, and are you researching this because you want to position yourself before the move?
you are absolutely right. That's what I'm trying to do. Because if you look at the US index at the moment, for the past few months, I'm on a monthly chart, price is just ding donging between 95 and 92. You see, and to me,
Yeah.
this is quite a tight range. So to me, if Biden managed to pass a stimulus package, and according to what happens in the past, which means the Democrat passed it, the way how money is used is being different, then I would position myself to wait if there's a higher low, that means somewhere in December, if it really being passed, and they classify as a, that means if Democrats actually won in the stimulus package, they get most of what they wanted. I will actually start to position most of my US position to be long. And if it's most of it is what the Republicans wanted, then if you look at a monthly chart, what happens then, which is this year, April, Trump passed the stimulus package, then I will want most of my position to be short. I mean, it's just that direct to me.
Yeah, I understand. I understand what you're saying, but I mean, that is, I really believe that that's one of the most difficult things to do. You know, uh, to try to position yourself before the actual reaction, because you know, when just before the elections, you know, the elections were on November 3rd. I'm going to tell you a story that I read that is very similar to what you're saying, right? So before the elections, on Friday, the Friday before the elections, there was a big bearish bet on the S&P 500. I mean, someone bought a lot of puts on the S&P 500 because they were. I mean, of course, that this trader was forecasting a crash on U.S. equities, just like we saw when Trump got elected, right?
Mhm.
And I mean, and he positioned himself uh, before the elections. And if you look at U.S. equities, what happened is that they started to rally. I mean, there was no crash at all. They rallied super hard on the news that Biden was being elected, right? So I mean, just I mean that I'm telling you this story because I believe that it's super hard to position yourself um, uh, before the actual market reaction.
Yeah, I would actually agree. It's not, I do that often, but it's just that anyway, this opportunity doesn't come that often. So I'm trying to do something which is being rarely done.
Yeah, I understand.
Well,
You've been
sometimes
trading.
it's,
Someone asked about oil, right?
yeah. So actually, for oil to me is been ranging hard, but I will still stick to my opinion, which I said to you I think a couple of weeks back, that towards the end of the year oil should rally. Uh, and then if I look at this, I don't know how many of you is familiar with this concept Wyckoff spring. That's really Wyckoff spring. So in fact, on the daily chart, we have already seen it playing out already. Yeah. So price range, and then you can have different terms for this. To me, is liquidity trap, but institutional trap, whichever that is. But once price plunge, immediately it shoot back up. So this is traditionally this is known as a Wyckoff spring. And once price break 43, I'll be interested to actually go into oil. Yeah, but that's my view for me. How about you, Orlando?
Yeah, I mean, I haven't traded oil for a while now. I believe that the last time I traded oil was back in June or at the end of May. But what I've seen so far is a nice rally in both Brent and WTI. But that is because of the news of the coronavirus vaccines from Pfizer and Moderna, right? Yeah, because well, yeah, the thing is that if I mean because of the vaccine news, the demand for petroleum-based product is going to increase.
Mm-hmm.
So yeah, so I believe that that's the main reason that we've seen a rally in crude right now. But the thing is that I've been following, and today is I don't know if it's still going on or if it's done, but I do believe that today was the OPEC meeting.
Is it? I'm not too sure.
OPEC.
I didn't follow the fundamental news. Let me check.
Uh, I mean, yeah. I mean, I was looking. I was looking at the news, and there was talks about big cuts in oil output from the OPEC plus countries. But again, I mean, again, I haven't touched crude in a while, and I haven't followed anything on that market. So. My opinion, I mean, I don't have an opinion actually, but yeah, but I mean, but just by looking at the chart, I mean, it's looking very rangy, and I mean, I don't know. Have you traded oil lately?
Not on MT4 side. On my stock portfolio I have, I'm actually long position on oil.
Really, that's cool.
Yeah.
And that is a long term hold, right?
Uh, well, I'm prepared to hold about 3 4 months. I think for trading view, for in terms of trading, that will be long term years.
All right. I mean, yeah, but I mean, just by looking at the chart, what comes to my mind is, I mean, this is the monthly chart, right?
Yep.
So this is the monthly chart. I mean, a break of the 43.40 level. I would look. Yeah, that's it. A break of the 43 to 43.40 level. I will look for a retest to get long. Actually, that seems like a great trade idea. Um, that, but I don't know if it's going to pan out right now in winter, and um, with all the lockdowns that we're seeing right now on the second spike, right? But yeah, I mean, because that, I mean, the 43 level is super strong. If you look at how it based on around May 2018, and then on May 2017, and again May 2016. I mean, that level is super strong. So it could go either way. Could be a good short, but if it breaks to the upside, right? A break and a retest could yield an awesome um, risk to reward and opportunity to the long side.
Yeah. Same. I'm really hoping this will play out. So if it plays out, I will actually have a skill in position over here.
Yeah, that's what I'm
I'm on
looking
the
at.
same side as you.
That is exactly what I'm looking at, mate.
All
And
right.
what I'm playing right now is the U.S. dollar, Canadian dollar to the long side. Um, let me share my screen just for a
All
second
right.
because I think that we are out of time.
Got about
But
5 more minutes on our side.
awesome. Hold on. This is the one. Share. So this is the USD CAD, right? And I was looking at the USD CAD right here. Let me just get rid of this. And uh, well, the thing is that because oil is rallying, um, that is, I mean, when oil rallies, that is completely bullish for the Canadian dollar, right?
Yep, it is.
Which is bearish for the USD CAD. But the thing is that, let me go to the hourly chart so we can actually have a look at this. But what I was looking at is a bounce of these levels right here, right? I mean, it's not very clear, but this zone right here to me is super important, right? And what's going on right now is that we broke to the downside, we retested it, and now we broke to the upside, we retested it, and now we are retesting it again. So this is a what I like to call a power buy zone. The reason that I call it a power buy zone is because it's pretty obvious that buyers are going to be positioned around this level, right? But I mean, but to trade this zone because it's not that obvious, it's not that perfect, stops have to be a little bit wider, right? Around this low. But the thing is that also I saw a breakout of what seems to be a flag, right? Right here. And the risk to reward on this trade or on this trade idea was actually better than a 1 to 2, risking about 50 pips to first targets 90 pips and the ultimate targets all the way up. And this is what I'm playing right now. And if we look at oil, I was looking at Brent too because of that play on the US dollar, Canadian dollar. I was looking at this right here. Oil printed a lower low and a lower high and a lower low. So if I mean this is Brent, right? And we could look at WTI, but it's basically the same. If oil breaks with in this case Brent with the 43.50 level and dips to retest these lows, I think that the USD CAD is going to rally. But again, I mean, this is one of the markets that I'm looking at, and the other one is the US dollar, New Zealand dollar, Lloyd. And let me go to the daily chart. Yep.
You're going for shorts.
What? Can you see my
You're go
screen?
Yep, I can see the screen. I mean, you're going for a short position.
Yeah, exactly. That's what I was looking at on the US dollar, New Zealand dollar. This zone right here. I mean, just look at it, right? Back in January 2019, heavy sellers were positioned here, and when sellers took control of this market, the NZD USD dipped from high to lows. Um, this was a negative 21.37% move or 1,500 pips, right? So I believe that the opportunity here is for a short, and if we go to the hourly, right? The NCD USD is print. I mean, it's looking quite tired. Let's call it tired, right? But it's printing. I mean, it's printing heavy wicks and heavy rejections on this level, right? But again, we are
Mhm.
still in a bullish structure. So to me, the short idea is not yet valid unless we break with this low, right? Around the 68.60. If we break with the 68.60, um, the immediate bullish structure would no longer be valid, and price could dip and retest at least these lows or these previous highs. But I'm not. I mean, I'm not. I'm just following price action here, and if and when it breaks with this low, I will most likely enter short here again because if we look at the 4 hour chart, right, and if we remember what we saw on the daily, the downside versus the risk that I'm going to be taking to first target is quite nice, right? And if we have a heavy sell off like we saw back in 2019, um, this could be a very good swing trade. Actually, I've been waiting and looking for this short opportunity for months now, but it hasn't panned out yet. It hasn't panned out yet. Um,
Actually, I will agree with you. I'm also looking for Kiwi shorts. I think tomorrow I will actually share how I actually look at Kiwi dollar. I have very similar charts with you. Unfortunately, today I think we have run a bit over time. Now it's 9:01. We've got to close the session.
Really? Hold on.
Huh?
Are you going to share the chart?
We are already overshot time.
That's right. I think we went a little bit a little bit towards the end of the show, right? Because we are 2 minutes away from the end of the show. I mean, this half an hour goes super fast, Lloyd.
Yeah. I mean, sorry, I held up the show early on with the discussion. But I'll be back tomorrow and share with you what I'm actually seeing for Kiwi dollar.
Yeah, and you know what? I'm going to do a little bit of research, not research, but I'm going to look at the DXY and the reaction to the previous rounds of QE, etc. So we can discuss it tomorrow.
All right, sure then.
All
We'll be
right.
back tomorrow at 8:30. See you, everyone.
Okay. Thank you for joining us, everyone. See you tomorrow. Bye.